So here we are balancing out my last video on why stocks are superior to real estate. That's right, I'm taking the other side now. I want to preface this by saying that real estate is very local and that real estate's attractiveness as an investment will vary greatly from one geographic region to another. The other thing is, within this context, when I refer to real estate, I am talking about residential real estate and not commercial real estate. And I'm referring to real estate specifically in regions with well-diversified economies and strong institutions and the rule of law. This is important. With that out of the way, let's get into it. Number one, home values are not constantly published like stocks. It's not easy to figure out what your home is actually worth down to the dollar until you actually sell it. Yes, you can look at comparative sales data, but it would have to be fairly recent. And even then, what you finally end up selling your home for may not be exactly that as an identical home just a few meters away. Even with recent comps, you would have to adjust for things like square footage, size of the backyard, and number of bathrooms and bedrooms. Now, why is this good, you ask? A study conducted by Fidelity between 2003 and 2013 found that the investors with the best returns were people who had died or who had simply forgotten about their portfolios. So the biggest saboteurs when it comes to investment performance are the investors themselves. Now, I'm not advocating for being dead just to see better returns, but the next best thing could be indifference. So not having the value of your home constantly shoved in your face will help minimize the emotional and reactive decision making, which is further aided by the next point. Homes are much less liquid than stocks, with much higher friction costs as well. You can't sell your home with the click of a button, not yet anyways, and thankfully so. Furthermore, the pool of available buyers for your home are going to be individuals who are living and working in your neighborhood. Unlike stocks, where the buyers can be from anywhere in the world. If you want to sell your home, you're likely going to have to work with a realtor, list your home, arrange showings to prospective buyers, and finally hope that it's not a bad season to sell your home. And after you've sold your home, you're probably going to have to pay a hefty realtor fee. Where I'm from, that's about 4 to 5% of the value of the property. But that is not the end of the story. Once you have sold your home, provided it was your primary residence, you're going to have to pack up your belongings and physically move to a new neighborhood and a new house. If it was a rental property, you wouldn't have to move, but you would have to pay capital gains taxes. Compare this to buying and selling ETFs that can be done with a click of a button, and if it's done within a tax-advantaged account, you may not pay a single cent in tax. So, how is this an advantage for real estate? Well, much like the first point, the barriers to selling a home has been shown to prevent frequent trading, and frequent trading is responsible for reduced returns. With homes, just like stocks, you make money while you wait. And the barriers to selling your home push you to wait until you absolutely need to sell. Number three, leverage. Real estate investments are the only investments where a bank will enable you to leverage your money 5x or 10x or more. Now, I know what you're going to say. Leverage cuts both ways, and that's true. But what is also true is that home prices in cities that have dynamic and diversified economies in a democratic country with an open society and good laws, that is to say, most developed countries, generally tend to rise, especially now as these are the only cities in the world that experience consistent immigration. In Freedom Land, down below, banks enable people to buy with as little as 5% down, which corresponds to a 20x leverage on paper. And when you can leverage your investment 5 to 10x or more, even a steady 2% to 4% increase in prices annually can generate large returns on your invested capital. Now, the next 2 points are going to be qualitative, and this is exactly why the stocks versus real estate debate is so difficult. Number 4, it is better for the average person. Homes are simply better for the average individual. What do I mean?
We call you normies. Okay, bye.
Now, for this point, I'm going to talk about buying a property for a primary residence, which is what most people do, rather than investment properties. See, the average person is not likely to save much, given savings rates in the mid-single digits for Canada and the US. We can see individuals making easily avoidable poor money decisions all around us. So, how is buying a home better? Well, see, your mortgage payment is comprised of 2 portions, the principal and interest. The interest portion is the cost for borrowing the money, and the principal is the portion that goes to paying down your mortgage. The principal portion is not an expense. It actually increases your net worth. The way I think about principal payments is like being forced to take a portion of your paycheck and put it into a long-term savings account. Now, because the principal portion acts like forced savings, it pays down the mortgage, and after a decade or two of making your mortgage payments, if the interest rates are favorable, you can go and refinance your mortgage and access those savings. The truth is, from a behavioral point of view, people don't generally end up investing the money that they save when they rent. And coupled with points 1 and 2 that push the owners to hold on to the property for long enough to generate significant wealth, the debt imposes a fiscal discipline on the owners of real estate. Number 5, stability. The owners of a home don't have to worry about being kicked out by the landlords if the landlord wants to sell, renovate, or use the property. They also don't face any rent shocks. Now, I admit that owners of real estate will be trading in rent shocks for surprise maintenance and repair bills, but stability is still a major source of unquantifiable value for homeowners, especially families. However, if expenses do end up rising, then you always have the option to, number 6, rent out a part of the home. If you have a spare bedroom or you have a basement suite, you can rent it out. Some people have even rented out their backyards and their pools and made a handsome living off it. This is a wise move as rents generally increase with property taxes and other associated fees, and you'll be able to tether some of the cash inflow with some of the cash outflow, such as property taxes, maintenance, and mortgage payments. Well, there you have it. Did I miss anything about the advantages of real estate? If I did, let me know in the comments, and if you've got value from this video, please like and subscribe. Cheers, have a nice day.